Hello, everyone. Thank you for joining us today, for taking time out of your Wednesday, and welcome to this Specialist Trading educational presentation. Now, today I want to ask the question, should you wait to trade ahead of earnings announcements? We're right in the middle of the earnings season. In fact, a lot of earnings came out today, have come out last week, some more set to come out in the near future. And this is probably one of the most common questions I'm asked in emails I get from our students around the world and in the United States as well, and prospective students, because they're constantly saying, well, Steve, if the earnings are going to come out, that might cause the stock to go tremendously up or down, a big move, and I don't want to be caught on the wrong side. And that's true. No one wants to be caught on the wrong side of an announcement, regardless of what the announcement is based on, earnings or buyout rumors or anything, some good or bad news. So it's a very common question. And I think by the end of today's presentation, you'll be able to answer that for yourself. But let me just start out by sharing with you something that happened this past week. For example, this is in QCOM. As you can see here, the stock basically coming into the last week was not doing much. It was kind of just going sideways. And in fact, you could have said, well, listen, the earnings are supposed to come out on the 30th, which was last week. You're interested in this stock, but you don't want to do anything prior to the earnings coming out. So you told yourself you'll buy once it trades above that area. That's the zone where you will be willing to buy. There's probably some resistance there, some sellers, so you don't want to get involved too early because if the earnings are bad, perhaps you don't want to lose a lot of money. So you tell yourself you'll wait to see if it trades above that resistance area, okay? So earnings set to come out on the 30th, and guess what? The earnings do come out, and then they gap up. So you're saying to yourself, wow, I can't buy now, 5-10 points higher. I was expecting it to buy it lower at these levels. It's just way too high. So you don't want to do anything. So you basically say to yourself, I missed it. Okay. You move on to the next one. Well, in all actuality, maybe you didn't miss it, because I'm going to share with you two methods today that, when combined, would have actually generated a buy signal right here some 3 days in advance, where you actually could have captured 15 points in advance to the earnings announcement coming out. Now, I know a lot of you would say, well, Steve, that's not the way I trade. I like to look at news. I like to look at, a lot of fundamental information. I'm just not skilled at looking at charts and making my decisions based off that. Well, that's okay, because we specifically designed our platform, the PTS Primo charting platform, to teach traders how to trade. We've got rave testimonials around the world. Once again, all our students around the world and in the United States, how simple and how easy trading can be when using our platform. It's almost like having your own personal mentor right there next to you. So we're going to use this today and share with you how you can trade during the earnings season, how you can answer that question in today's presentation. So welcome. Once again, my name is Steven Primo. I'm the president and founder of Specialist Trading. 12 years ago, I teamed up with Pro Trader Strategies with just one goal in mind, and that was simply to educate traders. That's our only mission, simply to really initiate you to the things that have stood the test of time. Now, I've been trading for roughly 43 years now. I started my career on the floor of the Pacific Stock Exchange. I was on the floor for a total of 16 years, and 9 of those years I was a specialist. That's where we get the name Specialist Trading. Now, specialist doesn't mean you're any more special than anyone else. It just means that in the old days, let's say you wanted to buy or sell a particular stock, IBM, okay? Well, what you would do is call up on the phone. You'd call up your stockbroker. He would take the order to buy 100 shares, let's say, of IBM. Your stockbroker, in turn, would contact the floor broker. This is the broker on the floor of the stock exchange. He would take your order to buy 100 shares of IBM. Then he would walk over to the trader who specialized in making a market in IBM. That's what I did. In fact, I did make markets in IBM, Waste Management, US Air, just to name a few. I made markets in roughly about 50 or 60 stocks. So if you wanted to buy or sell a particular equity, you had to walk up to the trader who specialized in making a market. Now, I made markets in stocks, roughly about 60 stocks during the crash of '87 and the bull market that followed. So I've traded straight up, straight down markets. I've traded sideways markets. Any system, any technique, any method or strategy you can come up with, I've traded just about, because it's been around for ages, most likely. It's just been rebranded and renamed. So in my 4 decades plus of experience, I know what works in terms of consistency, and I know what doesn't. So as your mentor, I want to teach you these things that have stood the test of time. I don't want to teach you things that maybe work for a couple of months, maybe a couple of years, but then dry up and give all your money back. So that's what our goal is, to simply teach you these things that have stood the test of time. And you'll see my attention to detail in trying to teach you today whether you should be trading or waiting in front of a news announcement. Now, before we begin, as always, we are required by law to share this with you. So please take a moment to view our disclaimer. I'm going to show you a lot of performance results using these two methods, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And also, please remember that all examples are strictly for educational purposes only. So once again, as you're taking a brief moment to view the disclaimer, I would like to take this time. If you haven't done so already, we have a good crowd here today. I know a lot of you haven't done so, so please feel free to follow us on Twitter. That's another way in which to educate yourself, because every day I post different information, anywhere from signals our strategies have generated to little bits of financial wisdom I've accumulated. So there's lots of great free education on our Twitter page. There's our handle right there. You may want to copy that down. So please feel free to follow us on Twitter. Now, as I stated in the opening statements, we are first and foremost an educational company. This separates us from most other webinars you may have attended, and from maybe some seminars or from books or different blogs or educational resources you may have visited in the past, and that really our only goal is simply to educate you, because a good mentor does not trade for you. You see, what would that be like if I were just simply to force feed you signals on a nightly basis and tell you this is what you should buy or this is what you should sell? You wouldn't be learning anything. In fact, you'd be doing the same thing you're most likely doing right now, right? You're going to a blog or to a chat room or a trading room and finding out what to buy or what to sell. Maybe you're watching the so-called pundits or gurus on TV to find out what they like. Or probably you're most likely asking your friends or your neighbor down the street, what do you like to buy or sell? This is really a recipe for disaster, because it's been estimated that 80 to 85% all traders fail. And I think this is the main reason. It's because this is what most traders do. You take yourself out of the game. You allow someone or something else to make your trading decisions for you. Our goal is to provide you with proper education that stood the time, so that ultimately you can make your own trading decisions. In my 4 decades plus of trading, that is the only way one can become a consistent trader. Sure, maybe you might hit a couple of good trades, maybe a couple of good decades, perhaps, but then most likely you'll give it all back. That's just the way usually it happens. What I want to see you do is trade more than 2 decades. I want to see you trade 3, 4, 5 decades if possible, by being a consistent trader and by making your own trading decisions. This is the specialist edge. This was the edge that was taught to me some 4 decades ago, and hopefully it'll be able to sustain you as well. Now, this is going to be a great educational presentation. I'm going to share with you a lot of examples that are probably just about a week old. But as always, I want you to ask me as many questions, but please wait till the end of today's class. I see some people are already asking questions. And what I'd like to do is wait till the end, because that way I have, I think, roughly about 150 slides here. If we stop for every slide, most likely we'll be here far too long. I don't want to take all of your Wednesday up. So please, if you have a question, wait till the very end. I will answer the one most common question, and that is this being recorded? Yes, it is. Each and every one of you will receive a link to this recording. So if you had technical difficulties, you couldn't see or hear me, or if you had to leave early, don't worry. You'll all get a link to this recording at the very end of today's presentation. Okay, so once again, if you happen to join me, please wait till the end of today's class to ask questions, and I promise I'll get to each and every one of them. All right. Now, let's begin today's presentation. Now, remember, as I stated earlier, I first began my trading on the floor of the Pacific Stock Exchange, okay? Even though I had advanced information, and, at the time it was advanced, but I knew what all the institutions were doing. They were entering orders in my book. I could see, what the orders were coming in. I knew what the orders were. I still was in charge of making markets in roughly about 60 stocks. So I knew the earnings, or not advance what the real earnings were, but I knew the estimates in advance of all these 60 stocks. I used to keep tabs on all these earnings, because after all, that is what I was taught by my mentors earlier, the mentors who had taught me to be a specialist, who I worked for as an assistant specialist. And they always used to keep earnings reports all the time, just in case they had a nice estimation of whether they're going to be good or bad. And so I relied on them heavily. Here's the only problem was, it didn't work, okay? Every once in a while, I would see some great earnings estimates, and they were right in line with what I had estimated doing the homework, and it would work tremendously. I'd buy and they'd go right up, I'd sell and they'd go down. But for the most part, they didn't seem in track with what I said. For example, they would say, okay, their great earnings estimates supposed to come out. The earnings would come out, sure, it'd go up a little, but then it'd go straight down. Or else they'd be terrible earnings estimates. Maybe they'd open down and then rally like crazy. So it was difficult trying to rely on them. And my future mentors who taught me the specialist edge saw how much I was struggling. And they said, Steve, why are you wasting your time focusing on earnings? And I said, well, that's the way I was taught by my former boss. He said he always looked at the earnings, and that's how you can find out what the market's going to do, right? I mean, you can find out in advance by looking at the estimates. They're going to be good, what the company's doing, the direction of the market, the direction of the company. So that's what I listened to. That's what told me what the market was going to do. And here's what my mentors taught me on the floor of the stock exchange over 4 decades ago. This was when they saw how much I was struggling by looking at the earnings. And they said, Steve, the market you're trading, regardless of time frame or direction, tells you everything you need to know. And then I thought, well, yeah, you mean the earnings, right? And they said, no, the market you're trading. In other words, the chart in front of you, it tells you everything you need to know. And I thought that was ridiculous. I said, how can this be telling me everything I need to know? I need to know about the inner workings of the company. I need to know about the jobless claims. Excuse me. I need to know about, what's going on around the world economically. I can't just rely on the chart in front of me. But then they started sharing with me these techniques and tips that were extremely simple. And then it took me a while to grasp these concepts, but after a while, I saw that they were right. And I saw that everything I needed to know was right in front of me, because after all, that's the source, right? That was the source of what I was trading. So why should I look anywhere else to find the answer in what I thought the market was doing? It was right there in front of me. So this is what we're going to be talking about today. I'm going to be teaching you how to listen to the market with these 2 methods that I've been using for over 4 decades now, that are extremely powerful but extremely simple. Okay, so that's what the basis is for today's presentation. And then you can answer, after you see these 2 methods in action this past week, you can answer the question yourself: should you wait to trade ahead of news announcements? All right, so what's the first method? It's strategy number 4. This is one of the first methods I learned on the floor of the exchange by my mentors, and I still continue to use it in some capacity today. Let's talk about some of the highlights. Designed for traders looking to catch momentum. It's a momentum play. So we're looking for a specific pattern as well to develop, because it's based off of a pattern. It only uses one indicator. I'm going to share with you what that is today. In fact, I'm going to give you 2 of the rules. There's only 4 rules in this strategy. I'm going to share with you half of them today, okay? So let's go to rule number 1. Buy and sell signals can only be entered either above or below the 50-period moving average. We call this our buy-sell line. That's why, because you're going to determine whether you're buying or selling. Remember, we're looking for a specific pattern. And if this pattern is generated above the 50-period moving average, well, then it generates a buy signal. Conversely, if it's generated below, then it will generate a sell signal. For example, if we see this right here, price being above, even though we've had some downward movement here, the overall trend is still up. We never want to sell above the 50-period moving average, and we never want to be buying below the 50-period moving average. I know a lot of you will say, Steve, I've had some of my best trades buying, when they're really low, and some of my best trades going short when it's really above. Sure, in the past, I did myself as well. But remember, it's all about consistency. And over time, you will not be a consistent trader if you are out of sync with the buy-sell line or the 50-period moving average. Just remember that. You most likely will give back everything you made on those great trades where you were out of sync. Now, that's rule number 1. Let's go to rule number 2. If your strategy generates a buy or sell signal, strategy number 4, it must close, the signal bar must close in either the top if you're going long or the bottom if you're going short, 25% of the range. So what does that mean here? Well, we see in this particular example here, it closed in the top 25% of its range, signified by this green bar. And sure, look at, we went up there a little bit. And then we went down again, but look at, here's another bar in the top 25%, and we went up even more. So you see the consistency in that. You would have done a lot better looking to go long with these 2 rules as opposed to looking to short this market. Same with this. We are below the 50 and we are closing in the bottom 25%. Okay? Look what happened. Did you try to buy anywhere going down below here, you would have lost a lot of money. Maybe you had shorted it here and decide to, or I'm sorry, you had bought it here and you had a nice 3 days of some nice upward movement. You decided to buy back again, you most likely would have given it all back. This is one of the reasons why most traders fail. You are out of sync with the market you're trading in front of you. See, the market is telling you, with the help of a few simple tools, it's telling you what it wants to do. But for some reason, we're always taught, well, listen to that guy in the trading room, or listen to that guy on TV, or listen to the economic reports. Okay? We're never taught to listen to the source, which is the chart in front of us. Now, let's show you some examples. Now, remember, once again, I cannot divulge the last two remaining rules of strategy number 4. So a lot of you may look at this and say, well, Steve, how come this wasn't a signal? Or why wasn't this a signal? Because they didn't meet the pattern recognition requirement involved in making a strategy number 4 sell signal or buy signal. For example, we look at this older chart in VRSN. We are above the 50-period moving average, so we're only going to look to buy, and we close in the top 25%. So a valid buy signal was generated. Now, I know a lot of you would say, well, here we close in the top, and here we close in the top. Why aren't they buy signals? Because they didn't meet the remaining rules of the strategy. But this one did. So you could decide to buy here, and look what happens. 20 points right off that bat to the upside. Here's another example. Now, this is in pins. This was an older example. Now, someone say, well, Steve, we're kind of going sideways here. We're building a base, but where is price in relation to the 50-period moving average? We are below. So remember, the rules state that you will not buy anything below the 50-period moving average. So we see here that we close in the bottom 25%. It meets all of the rules, the remaining rules of the strategy. You could have decided to sell. Remember, this is not a system where everyone has to take every trade in order to, have some statistics. We don't believe, nor do we keep statistics as specialist trading, because I have taught and traded systems before that kept statistics, and sure, they would work great for a while, but then when the market environment changed, each and every one of them blew up. They all went back 10, 20 years sometimes of great statistics. And then when the market changed, remember 2008, they all blew up. So what good are statistics if the environment shifts and then they don't work anymore? What matters is that you're listening to what you're looking at, the market, and then evolving and changing with it. So right here, we're below the 50. A sell signal is generated. Look what happened at the stop. Someone could say, well, gosh, how did you know this thing was going to fall out of bed? We didn't know. We never predict how high or how low something will go. We just simply ride it as long as we want. And one of the great things about strategy number 4 is if the trend is strong enough and we continue to stay below the 50-period moving average, if you miss that first signal, it will generate a lot more along the way. Now, we all know as well that nothing works 100% of the time. If anyone tells you that in a webinar, please run. I've been trading long enough to know that there are losses with every method. It makes no difference what you're trading. It could be some master system that works off some master indicator or some great formulation that no one's ever thought of before. There's still going to be losses. For example, as we look at this older chart in 6 here, we're below the 50-period moving average. We have a valid sell signal generated. We're in the bottom 25%. So let's say you decided to sell. Okay, let's say you were a new student of mine and that's your first trade you're going to take. You're excited to make a bunch of money, and then look what happens. You get stopped out. You say to yourself, wow, okay, well, that's okay. Steve says there will be losses from time to time. So all of a sudden you see that, well, we're still below the 50 and we close in the bottom 25%. I've studied the rules, and guess what? That's another sell signal. So you think to yourself, maybe I got in a little bit too early. So you decide to sell again. And once again, you get stopped out, all right? Now you're saying to yourself, wow, this really isn't working too great. But now we're above the 50, so now we got to look at this as a buying opportunity. We're no longer going to sell. And about a week or two later, we get a couple of buy signals. Now they're still above the 50, so you decide, okay, I'm going to buy. I'm going to double my buying exposure, and I'll make back everything I lost. And then look what happens, okay? This will happen from time to time. I'm showing you this to share with you that nothing works 100% of the time. So we have to ask ourselves, what if there were a tool like a filter that could filter out, not 100% of the time, but at least a good portion of the time, filter out those inconsistent trades, those ones that were faulty, that didn't work out? Well, this brings us to our second method, the PET-D, another great tool I was introduced to on the floor. At the time, we used to call it the formula because it was a formula you had to calculate almost on a tick-by-tick basis. But we've taken the hard work out of it for you and made it into a color bar algorithm. So what exactly does the PET-D do? Well, let's look at this example here. The PET-D is a great tool for determining the short-term trend. Now, the reason why it's so great is because most people, regardless of how you trade, what market or time frame, come in the trend a little bit too late. As you look at this chart here in Aetna, we see here that about this time here, most traders are convinced that you're in an uptrend. So let's say you decide to go long, and for the next week you have a nice trade under your belt, and you're thinking, well, I'm doing pretty well, and then this happens, okay? So you bought relatively close to the high. What if there were a tool that could help you in advance learn where the trend is so you didn't have to wait so long? Well, this is what we did with a PET-D. We turned it into a color bar algorithm, took all the hard work out of it for you so that you didn't have to calculate it yourself. Now, it's either going to be a green bar or a red bar. That tells you what the trend is. So right back here, when we knew in advance the bars were all green, we didn't have to wait and say, wow, okay, we're going to go long up here, because we knew well in advance that all the bars were green. And even though it doesn't pick the top or the bottom, it gives you an advance warning right here. We knew well in advance that the trend had changed and you could get out. So as it says in front of you, the beauty of the PET-D is that it tells you which direction you should be trading. And once you know, you can confirm if your strategy is in sync with that direction. All right, so I'm sure you're saying, okay, well, how does this apply to strategy 4? Well, when we combine these two methods, strategy 4 and the PET-D, we have what we call our dynamic duo. This is probably our most popular package, educational package we have at Specialist Trading and Pro Trader Strategies. Why? Well, because it really is so simple to apply, and it works in any market, in any time frame, and it is our most popular package around the world, okay? So let's share with you exactly how it works. Here are the rules for the dynamic duo process, okay? And it's extremely simple. If you get a strategy number 4 buy signal, you're only going to trade strategy number 4 buy signals that are colored green by the PET-D, okay? It's that simple. And you're only going to trade strategy number 4 sell signals that are colored red by the PET-D. That's how simple it is. There's nothing more you have to do, but let me show you how powerful it is. Because remember, these two methods are specifically designed to listen to the market. They're not listening to anything else. The strategy 4 requirement for the pattern it's looking for is based off of what the market is doing, not off what the earnings are, not off what the economic report is. Excuse me again. And the PET-D is really a translator, translating on almost a tick-by-tick basis what the market wants to do. So both of these are great translators as to what the market wants to do. And remember, if you feel like this is too complicated for you, this is not the type of trader you are, well, don't worry. We specifically designed the PTS Primo charting platform for traders like you because it makes trading simple. It teaches you how to trade the dynamic duo in a simple, easy, step-by-step process. Let me share with you what this process is, okay? Let's look at this older chart in APA. All right, here's the process you would do. If you look in hindsight, how would you have traded this? On our PTS Primo charting platform, which the first thing you want to do is go to the green, upper green strategy tab here with all our techniques and all of our methods, and go over to strategy number 4. Click on the strategy number 4 tab, and you'll see this drop-down menu appear. Now, simply click on signal arrows. And what will happen is it'll automatically generate where all the strategy number 4 sell signals are. Now remember, we're not a black box. We teach you in the course what to look for. In fact, our goal is to ultimately have you come to the place where you no longer have to click on these signal arrows. You'll know exactly where these signals are just by looking at the chart. But while you're learning, remember this is an educational platform. While you're learning, you can check your work. All right, so you see a number of sell signals here generated. All right, so some are better than others. For example, this one worked very well, immediately went down. This one didn't work at all. You would have gotten stopped out. This buy signal worked really well, but the remaining 5 buy signals worked terribly. Okay, so obviously there are some good signals here. There's some poor ones here. How could we have filtered out the poor ones from the good ones? Well, That's where the PET-D translator comes in. Now, in our upper green strategy tab again, we click on the PET-D, and it automatically changes the colors. Okay, remember, the rules are for a sell signal, the bars have to be colored red. So as you can see here, this was a valid sell signal. And it gave you permission and potentially could have captured 5 points to the downside. Now remember, we teach you the rules for entry, for exits, for stop placement. So this is not something we just give you the signals. We also teach you different, upwards of 6 or 7 different entries, exits, and stop placements, okay? It's up to you to decide. Remember, we're teaching you how to trade with different variables. It's up to you to decide which ones you want to take. Now, we have another sell signal, but what color is it? It's green. So we're not going to take that trade, and therefore we would not have been stopped out. Now, a couple of weeks later, we get a buy signal. The rules state that in order to take a buy signal with a dynamic duo, it has to be colored green. And so it is colored green. It's outlined green. So we could have taken that trade and potentially captured, I believe, about 8 points. Not a bad little setup, right? Now, coming into the end of this chart, we have 1, 2, 3, 4, 5 buy signals. What color are all these buy signals on the bar on top of the arrow? They're all red, right? So what are the rules stating to us? Do we buy if those bars are colored red? No, we can only buy if the color is green. So therefore, we would not have taken any one of these trades and missed this big sell-off, okay? Do you see how beautiful the PET-D can really help you and help you determine by confirming whether that signal is going to be a good one or a valid one or not? And as we always state, some of the best trades are the ones you never take. So it would have saved you those losses. All right, so we've given you the basic format now of the dynamic duo. Let's go back to the original question and the title that we posed here in the opening statement. Should you wait to trade ahead of earnings announcement? Because that's really what we're going to be talking about today. Remember, we're right in the middle of earnings announcements. Some have been good, some have been bad. But let's say you really wanted to trade, but you really weren't sure because you don't want to get caught on the wrong side. Well, I'm going to share with you a lot of examples. Most of them just took place this past week. And at the end, I know that you'll be able to decide for yourself whether you should be trading ahead or should you be waiting for earnings announcements. Okay, let's start out by looking at that chart we started out before, QCOM, okay? Remember, looking at this, most traders would say, well, you know, not really doing much. I think it's going to be good earnings. You know, the chat room I go to likes this, and they say the earnings should be good, but I still don't feel comfortable, so I'll wait for it to trade above here, above this breakout area, okay? Well, first thing we want to do is we're not concerned with at all with support and resistance. We're not concerned with what the institutions or the banks are doing. I used to trade with them, and they had some of the worst track records I've ever seen, so why would I rely on what the institutions are doing? Okay, I'm not going to wait for the economic reports. I'm going to listen to what the market's telling me. What's the market telling me? Well, according to the pattern, if we click on the signal arrows, we see that it generated a buy signal here, all right, on the 27th. Now, let's say you're still a little uncertain. You don't have enough confidence yet. So in order to confirm this, click on the PET-D and see if it's confirmed. Remember, all we need is for the bar that is above the arrow to be colored green. We don't care what the previous bars are or the bars that follow it are. But we add the PET-D and we see that, yes, it is green. It's outlined green. So let's say on the 27th, you said, listen, I have the confidence to take this trade. I don't care what the earnings are. Well, you have a nice trade there in 3 days. If you had waited for earnings and once the earnings came out and you bought in the opening, well, you could have possibly made 5 points. That's okay. But if you had bought based off what the market was telling you, you could have made 15 points potentially in 3 days. Okay? You see how simple this is. Let's go on to another example here. Look at PayPal, all right, this past week, all right? What if you're waiting about the earnings coming out on the 30th, which was last week? Click on strategy number 4. Click on signal arrows. We see that there's a buy signal generated off this pattern we teach you in the course, okay? In order to confirm it, click on PET-D. And yes, oh, I should say, I'm sorry, no, it's not colored green. What color is it? Red. So we're not going to take this trade, okay? But this is the one I jumped ahead of. The very next day, it did generate a green bar to go long. Therefore, even though we didn't buy at the bottom, remember, we're not concerned with buying at the bottom and selling at the top. We just want to have consistency. So now this has given us the confidence we need. And so we could decide on the 27th, once again, to go long. And 3 days later, the earnings come out. Now, if you bought on the day of the earnings, you potentially could have made 7 points. Not bad. You would have had to get out at the very top. But potentially, you could have made 20 points getting out at the top with our signal that was generated just 3 days ahead. So which one would you have rather taken? Let's look at BRKS. All right. This is on the 28th. The earnings were coming out on the 31st. This was not even a week ago. All right. Once again, looks like we're in a range market. In fact, you could have gone to that trading room, and the guy in charge of the trading room is saying, don't touch this yet until we break out of this range, because nothing good ever happens in a range. That's where you get whipsawed, right? Okay. Well, they may think they're listening to the market, but one trader's range is another trader's buy or sell signal. For example, there was a buy signal created in that so-called range using the valid strategy number 4 setup. In order to confirm it, it was colored green. So we're not concerned with range bars. We're not concerned with range markets. We're not concerned with whipsaw areas. We're concerned with what the market is telling us, not some guy in a chat room or trading room, not some guy on TV. And the market is telling us it wants to go higher, and it's confirmed. So you could have purchased this on the 27th, and the earnings came out on the 31st last week. If you had bought on the day of the earnings on the opening, you could have potentially captured 4 points. If you had bought 4 days prior to that using strategy number 4, you could have potentially captured 9 points. Let's look at UPS, okay? A buy signal that was confirmed by the PET-D was generated on the 27th. Now, the earnings came out on the 30th. Had you purchased on the opening day with the earnings, you could have potentially made 8 points. But had you purchased 3 days earlier with the strategy number 4 buy signal, you could have made potentially 25 points. How about GSHD? Okay. All right. A buy signal was generated on the 22nd, a couple of weeks ago. Now, this is waiting for the earnings to come out on the 31st, just last week. Now, the stock looks as if it's absolutely doing nothing, right? Just going sideways, and the last 3 days have closed lower. But guess what? The market doesn't care about that, because it's telling us, according to the strategy and according to the translator, even though it's been going sideways to lower, all the bars are green. So on sight, we may think it's going lower, but if we use our translator, the market, it's telling us it wants to go higher. So there's really, if you don't want to, there's no need to wait for the earnings, because it's telling you right now it wants to go higher. Had you waited till the earnings come out on the 31st, you could have potentially captured 9 points. But if you took the buy signal on the 22nd, potentially you could have captured 25. Are you starting to see a pattern here? Let's look at XLNX. Now, 2 buy signals were generated on the 14th and 15th of last month, okay? Just a little less than 3 weeks ago. But someone would say, but Steve, the stock looks like it's not doing anything. It's going sideways. Well, let's see what our translator says. You could even say it's going lower. But the translator, once applied, says, no, it wants to go higher, because the short-term trend is up. All of the bars are green. So it's your choice. You do not have to take the trade. Once again, this is not a system. This is not something where you're looking for statistics. It's your choice. But you got 2 choices, 2 chances to go long on the 14th and the 15th. If you waited for the 31st, you could have potentially made 2 points. But if you got in 2 or 3 weeks earlier, you could have potentially made 10 points. Let's look at Apple, okay? Once again, there was a mini cluster of buy signals generated on the 24th and the 27th, where they both confirmed by the PET-D. Well, the first one was not. So you have not taken that signal at all. But the second one on the 27th was. Okay, sometimes you have to wait for confirmation. You just want to be more sure and more consistent. So don't worry about buying at the very low. What's more important is making sure you got on the train that's leaving in your direction. You don't want to get on the wrong train. Okay, so the PET-D did finally confirm it on the 27th. Now, Apple's earnings were set to come out on the 31st. This was last week. When the earnings did finally come out 4 days later, if you had purchased on the day of the earnings, you could have potentially made 13 points. Not bad. But if you had purchased it 4 days earlier based off the strategy 4 signal, which is based off what the market was telling you, not the earnings, but what the market was telling you, you could have potentially made almost 3 times or 4 times that much. 45 points potentially you could have made. Let's look at another example, IDEX. All right. Once again, earnings set to come out on the 31st, last Thursday, I believe. All right. Stock is absolutely doing nothing, going basically sideways. You could say to yourself, well, Steve, I took that $10,000 course on the institutions and they're all selling here. So I'm sure that they know that the earnings are going to be bad. I'm not going to touch this thing with a 10-foot pole. You never want to go against the earnings, right? And especially you never want to go against the institutions. Once again, I used to trade with the institutions. They used to enter the orders in my book when I was trading waste management, when I was trading US Air. And guess what? They had some of the worst decisions that I used to follow. I mean, I would never follow the institutions because they had some of the worst records I'd ever seen. And not just in my stocks that I made markets in other ones, but they had big enough money to back it up with a few winners here and there. But overall, they had some terrible decision making. So I would never follow what the institutions are doing. I would never use any worn out, dated ideas such as support or resistance. I would listen to what the market's telling me. What is the source telling me? Well, if we listen to the pattern, it's telling me that there's a buy signal there. So the pattern says it wants to go higher. And if we listen to the translator, is it confirming it? Yes, it was. Not only was it confirming that one bar, it was also confirming all of the bars. So where the normal eye would say the stock is doing nothing, the person who's trained to listen to the market is saying, no, the market's telling me it wants to go higher. All the bars are green. So that would have been a high probability trade to take should you have decided. Now, the earnings finally did come out on the 31st. You could have potentially captured 25 points had you gone long that day. Not a bad little trade. But would you have rather purchased it a couple of weeks earlier where you could have potentially made almost 3 times that amount, 70 points, okay? You see the difference here? What we're trying to share with you, how simpler it is and how much more powerful it is just simply listening to the market. Now, here's another cluster of signals that happened just this past week, and the actual earnings came out today. This was in letter W, okay? This is in Wayfair. Okay, we had 2 signals generated, one on the 24th, again, one on the 27th, all right? Now, if you're waiting for the earnings, you would have had to wait, all right, ultimately on the 5th. But a week or so earlier, you would have known that both of those signals were actually confirmed by the PET-D. So why would you have to wait when you could have gotten in ahead of the game, ahead of the stock going up? Now, had you bought today, potentially, I took these snapshots roughly about an hour before today's presentation, potentially you could have made 18 points today. That's not bad. That's a nice little trade, right? 18 points. But what if you had bought on the 24th or 27th? You could have potentially captured 78 points. So I ask the question once again, is it more highly consistent to wait for earnings or to trade by listening to the market? Now, there are also other ways to apply the dynamic dual. We don't just have to use them for earnings. I don't want you to think that this only works during earnings. I apply this all the time in different markets, different time frames, most especially the E-mini markets on a 5-minute time frame and tick charts as well. So let me share with you how you can apply this all the time during the year with other announcements as well. For example, here's what happened on the 3rd of August, just this past week, Monday. Varian came out and the medical system stock surged on the 3rd. Shares of the stock, VAR, jumped more than 20%. This was last Monday after the cancer treatment specialist said it struck a deal to be acquired by Siemens Healthineers for $16.4 billion. So this is great news, right? And if we look at the chart on the 3rd, that's when the news came out. So this is what most traders do. They fall into the victim pattern. They say, gosh, I never know when these things are going to happen. I would have loved to have been long that stock, but I always seem to miss these big ones, and I see these ones just get away from me. Well, sure. I mean, it's not guaranteed that you can always be in these things. But remember, if you wait for news, you'll fall party to that attitude that a lot of traders like to do, is become a victim and sulk and say they never get the big ones. They always miss the big whales and they are only looking at the small little ones. Well, that's not always true, because if we apply our strategy on the 27th, once again, it generated a buy signal in Varian, okay? And if you applied the PET-D, it was also confirmed. In fact, leading up to that, all the bars were saying it wanted to go high. So you could have potentially captured 40 points before a buyout announcement just by applying strategy number 4 along with the PET D. Now you know why we call it our dynamic duo. Here's another example here. This is an older example. I wanted to share with you what happened. Remember what happened in February and March when the market fell out of bed with the pandemic news getting really serious for the first time? Well, this was actually before that news had really hit us, because looking at VLO, the stock was basically going sideways. A lot of people were looking at this saying, hey, that's major support. After all, we've been going straight up, right? So this has got to be major support. I want to buy this. But once again, using our dynamic duo, all you have to do is click on strategy 4, click on signal arrow, and it will confirm that there was actually a sell signal. So we're not going to concern ourselves with support. I mean, support and resistance, there's no such thing. We don't teach those things, because one trader's support is another trader's resistance. They are too subjective. We want things that are cut and dry and they don't rely on outside sources. Strategy number 4 is only relying on a specific pattern that the market in front of you makes. Not some guy in a chat room, or not some guy on TV, or not some institution. The market is generating this pattern. Now, in order to confirm it, you just simply click on the PET D, and yes, the color was red. So that's a high probability sell signal, regardless of someone telling you that there's support there. And we all know what happened in March, and how someone always says, our new students always say, how does it know this in advance? Because it's listening to the source. The market always tells you in advance what it wants to do, just like my mentors taught me. So it took me a while to grasp that concept, but once I did, that's when things started to really click. And I eventually let go of all these outdated and worn out things that I was supposed to work for me, but really didn't. Here's another example of how you can use this to confirm, all right? We had 3 sell signals generated by strategy number 4. All right, this one worked out nicely, but these two obviously didn't. Once you apply the PET D, you see how well it can work for you in terms of confirming. Potentially, you could have captured 18 points in just 3 days, and then you would not have taken these 2 signals because they weren't confirmed. They should have been red, but the PET D colored them green. As well with Nikola, NKLA, all right? Back in May, a buy signal was generated back here. Potentially, you could have captured 68 points just in about a month, 3 weeks to a month. And look at this buy signal. This buy signal was later generated here in July, just last month, but it was colored red by the PET D, so you would not have taken it, and you therefore would not have generated this huge loss. See, trading is simple when you learn how to listen to the source. Now, let's look at KODK, because we know it's been in the news. Once again, traders love to say and fall victim to that mental attitude where they say, how come I can never see this stuff? Gosh, I always miss these big ones, right? This is a common attitude that traders love to have because, basically, once again, it relieves you of all responsibility, and you can always blame the market. You don't have to take responsibility. But once you learn how to listen to the market, once you make your own trading decisions, then you can take responsibility and really start to at least have a chance to capture some of these really nice winners. For example, no one in the world would have been looking at KODK this past week, all right? There was no reason to. The stock was basically just hovering for the last several months between $1 and $2 or $3. There's nothing going on. But then all of a sudden, on the 28th, just last week, this happened. We have that little blip. Now, after the close, this news came out that KODK is getting into the pandemic fighting business, okay? The shares surged 300% after a pharmaceutical deal. So as we can see here, look what happened the next day. This is where traders say to themselves, gosh, I missed those big ones. How come I can never find that out? Well, let's go back and look at our trading dynamic duo and see if it could have helped us. Once again, if you had clicked on strategy 4, just say off a whim, you had a little buzz going on here because you saw this little buzz here, you would have seen that the day before, a buy signal was generated. So even if you had gone in a day later, that would have still been nice. But the main thing is you want to confirm it. And even on this, all this sideways action, all we need is for this bar to be colored green. And you click on the PET D and look at the color, green. So potentially you could have made 57 points in 2 days in KODK without having to wait for that news to come out. Someone could say, that's amazing. How did you guys know? So you guys do a lot of research on fundamental news and earnings and stocks and what's going on with the company? No, absolutely not. In fact, personally, I stopped looking at any news events, earnings, economic reports, jobless claims, anything concerning fundamental news over 4 decades ago. There's no reason to now. The only thing I need to look at is the market in front of me. I've just given you dozens of examples where there was absolutely no reason to concern yourself with news or outside source with earnings. Now, I'm not telling you you can't look at them because that's not our role. Our role as a teacher, as a mentor, is not to tell you what not to do. Our role as a mentor is simply to provide you with information that has stood the test of time. If you want to decide to continue waiting for news and looking at earnings reports, that's your decision. That's fine with us. But most of our students, like myself, have very difficult time grasping these concepts. But after they see, like I showed you in today's examples, how well this works, they quickly let go of worn out things that really show no consistency. So let's recap before we go into the question and answer portion. Remember, you want to combine these two methods. The first one is strategy number 4. It's a pattern recognition method where I just gave you 2 of the rules today in today's method, the 50-period moving average and looking for the bar to close in the top or bottom 25%. In fact, I can almost guarantee if you go back and look at your last 10, 20 trades, that would have increased your odds for consistency if you applied that to your current strategy. So you want to use strategy number 4, but then confirm the signals because we know that not every signal is going to be a winner. Confirm it with our short-term trend identifier. That's the PET-D. It is basically a translator. It translates on a tick-by-tick basis what the market wants to do. When you combine these 2 really highly consistent methods, you get our most, I would say, our most powerful and as well simple trading package. That's the dynamic duo. Now, once again, if this is not your style, if you have difficulty learning these things, we devised the PTS Primo charts specifically for traders like you to make it simple. You saw how simple it is. Everything is one click away. It's one-click access. And even though we teach you all of the rules and what they're based off of, what to look for, we give you all these up and down arrows and we color the bars green so that you will ultimately be able to see it and check your work. So ask yourself before you ask me questions, do you think these edges can help your trading during the next earnings season? How about just during the next month? Because remember, the dynamic duo can be applied in any market, any time frame, any direction, and in any time of the year. We have a great attendee discount today for all the people taking time out of your Wednesday. We're going to offer you our dynamic duo special. This is strategy number 4 along with the PET-D, okay? Now you see here it says stock strategy number 4. In the beginning, we labeled it stock strategy because it really was coming from my experience of using it on the floor. But over time, we've seen through our students and through myself, my personal experience, that it works in any market and on time frame. So don't get fooled by the title there, the graphic saying stock strategy. I personally use it intraday trading, the E-mini. We have traders that use it on currency pairs, even Bitcoin, okay? Now, along with this, we're going to throw in 12 months of the PTS Primo chart so you can learn, have your own personal mentor right there alongside with you. Now, 12 months would normally run close to $1,800. We're going to throw in 12 months of the platform absolutely free, no cost. All you're going to have to pay for is the dynamic duo package. Now, here's what's included, because once you get the platform, you're not going to just get the PET-D and the strategy number 4. You're also going to get over 90 of the most prominent technical indicators. You're going to get a signal scanner so you can scan for dynamic duo setups on a nightly basis. You're going to get our strength of trend tool, which has an uncanny ability to find out when a market is running out of steam or it still has more momentum. Great personalized tech support. But here's, I think, one of the best extra added perks along on our platform. These are the proprietary exit levels, okay? We specifically designed this. This is just one of our different methods. We have upwards of 7 different exit methods in the dynamic duo course. This is just one of them. Let me show you how simple it is. Here's an example in DVM that was in the beginning of June, okay? We had one buy signal that was not confirmed by the PET-D, so you would not have taken that one. But the second one was. Now here's the beauty of the platform, because you can know prior to actually even entering the trade where you may want to exit. On our platform, all you would have to do is click on strategy number 4 in the drop-down menu, click on range extensions. Remember, you can click on signal arrows, but now you click on range extension exits. And here we have 3 different exits you could have chosen. Now, let's say you wanted to choose the top one, the most bang for your buck. Had you chosen that one, well, look there, in about a week, you would have exited right there, and look what happened after that. Okay, this is all pre-formatted. It's all right there. Now, in the course, we teach you what these exits are based off of and how to calculate them on your own. But trust me, I used to have to calculate these on my own with a hand calculator, and by using little squiggly lines on my chart, it's all one click away. Now, as you see later on, once again, another perfect example of how well the dynamic duo works. Another buy signal in the stock was generated a week or so later, but what color is it? It's colored red, so you would not have taken it and therefore not have had a losing trade. This is just the power of the dynamic duo course. You get all of this, once again, along with personalized tech support. So for, if any reason you can't open up a chart, you don't know how to watch an instructional video, our tech support will be there for you in a matter of moments to resolve the issues. All right, so let's break down our dynamic duo combo plus. Remember, this comes with 12 months of the platform absolutely free. Now, if we broke down this individually, in other words, if we didn't have this special today and you were just purchasing these things on your own, let's break them down. Strategy 4 would cost you roughly close to $700. The PET D alone, which can be applied to any market, any time frame, would cost you close to $3,000. And the PTS Primo charts, as we said earlier, would be close to $1,800. Okay, so altogether, you'd have to spend close to $5,500. I know some other websites do that. They charge you that much for these type of offers. We're not going to come anywhere close to that. Here's the offer we're having today. We're going to say for a one-time payment of $497, you can be up and running and just pay monthly installment payments of $97 per month. That's it. That's how simple it is to be up and running today. Less than $500 can get you up and running today with the platform, with Strategy 4, as well as with the PET D, and then just $97 a month. Now, I'm not going to guarantee anything, but you saw how well the signals were generated this past week. Okay? So if you're thinking that, well, gosh, yeah, how do I know this is going to work, or I'll be able to make $97 a month? I'm not telling you you will, but look at what happened this past week. Do you think you could have made $97 a month just off the signals I shared with you what happened a week ago? Okay? Now, a lot of our students say, listen, Steve, that's great, but I have more than enough to pay for it. What if I just want to pay for it flat out right? Okay, well, we're only going to charge you one-time fee of $29.95. That's it. For $29.95, less than $3,000, you could be owning all of this, which would normally be costing you close to $5,500, okay? You'd be saving about $2,500. So this is a great, great offer. You saw all the examples we gave you from last week, okay? The Dynamic Duo, once again, is our most popular trading package because it's used all around the world in different markets, currency pairs, stocks, futures, ETFs, and Bitcoin. As we say here, your trading can thrive during these turbulent markets. Take advantage of this great, great offer, whether you want to pay it outright for $29.95 or for a one-time fee of $497 and just $97 a month. Take advantage of this. Here's how to take advantage of this. Contact Pro Trader Strategies. I developed a platform, and they're in charge of all of our course discounts and pricing. You can email them at trading@protraderstrategies.com. I would suggest calling them at 310-598-6677 to construct that payment plan if you want, okay? So you can do it over the phone. You can talk about it. They will be happy to give you more information, but that, in my opinion, would be the best thing. And there's absolutely no obligation. Don't feel as if you call, they're going to pressure you into buying it. They're going to give you more information, and then you can decide. My only suggestion would be not to sit on this, though. Go ahead, watch the video today once we send it out on you. But remember, if you wait the way some students have done and say, well, you know what? 2 weeks later, you say to yourself, gosh, I've been trading for 2 more weeks and nothing I'm doing is working. I'm going to take up that offer that Steve talked about a couple of weeks ago in the Dynamic Duo. So you call it Pro Trader Strategies, but guess what? It's no longer being offered for $497 and $97 per month. You're back up to $5,500. So you don't want to sit on it too long. Now, that link you see at the very bottom is the link that will take you to the sign-up page. We've just posted a live link in the chat box. So if you go to the chat box on the far right-hand corner of the GoToWebinar column, you see that a live link has been posted there. All you have to do is click on that link as well, okay? Now, I promised you I would reserve the last 10 minutes or so for any questions, so I'll open up the question and answer box. All you have to do is open up the question and answer box and type in, and you will be able to ask me any question you like, okay? Let's see, how do you know which stock to choose? That's a great question. And well, remember, first of all, you can, in the course, we give you different ways that show some higher probability ones. But once you apply the PET-D, it will filter out a lot of them, okay? Now, in the course, we share with you different ways, different things we have seen, and our students have told us what are some of the high probability setups and what are the ones that aren't. I'll share with you one method that students have told us and which I like to also talk about. It's the slope of the 50-period moving average. Let's say you get a dynamic duo setup, and the slope is going to determine, also it's going to help you. Now, if you get a buy setup, you want to see the slope of that 50-period moving average heading up very strongly to the upside. You want a strong upward slope. That's telling you that there's strong overall momentum in the trade. So oftentimes, not guaranteed, but oftentimes that has shown to be a high probability setup. Now, same thing with the downside. Let's say you get a sell setup. You want to see the 50-period moving average have a very strong downward slope. That's showing you that there's strong downward momentum on the overall momentum scale. So that's just one of the ways. We give you different little techniques and edges as well to share with you, okay? So that's just one of the ways that you'll learn in our course. And once again, we require, not suggest, but we require that all of our students paper trade first before actually trading with real capital. And during that process of paper trading, remember, you'll get my personal email address. You can contact me whenever you'd like with any questions, and I will help you as well. So I'm not just throwing you to the wolves and giving you this program and saying, good luck, best of luck trading. No, you can always contact me and ask me any questions you'd like, okay? Another question, do you usually sell before earnings announcements? Your assistance is appreciated. Well, once again, it makes, remember, I think you can tell by the announcement, by the presentation today, that I don't care or concern myself with earnings announcements. So whether they're buy or sell signals, it makes no difference to me. I stopped looking at earnings 4 decades ago. And if I'm still here, doesn't that kind of tell you whether there's consistency in this or not? So once again, it really makes no difference what I do. It's up to you what you want to decide. In fact, that is what we teach our students. You should never be listening to an outside source to help you make your decisions. So we're giving you this information. It's up to you to decide. And remember, if you want to still follow the earnings, that's fine, and that's your prerogative. All we're saying is that it is in no way required. And you just saw this past week I just gave you dozens of examples that there was absolutely no reason to concern yourself with earnings. Now, if you want to, that's fine, but there's absolutely no reason. That's why I stopped looking at them 4 decades ago. 4 decades ago, prior to what my mentors taught me, I had earnings on roughly 60 stocks in front of me, earnings estimates, and it was a losing battle. It didn't work. So, I finally let go of it, and that's when things started to work. So it really makes no difference what I do. It's up to you how you decide. And I think today's presentation would help you in deciding that decision on your own. Which broker do you use that gives all the stocks in the PTS Primo? Because my broker doesn't have all of these stocks. Well, once again, we're not affiliated with any broker per se. I would say, because once again, we are just an educational company. I would kind of leave you to do that due diligence, because we don't really have a working relationship with any brokers in terms of actually trading through them. Now, having said that, you may want to, since they're more in charge of that aspect than I am, I'm just involved in the teaching and trading aspect, you may want to contact Pro Trader Strategies, talk to a personal trading consultant, and perhaps they have better information on that subject. But we're not really affiliated with brokers in terms of giving out how much they, have our stocks that we provide lists for it with, okay? Thank you very much for your great advice. You're more than welcome, okay? Remember, as mentors, that's all we're trying to do. We're not trying to tell you how to trade. Remember, a good mentor does not trade for you. A good mentor teaches you all the things that you can use to trade, but then lets you decide, okay? Think if you were trying to learn how to swim, okay, because you wanted to go to a party, or perhaps you wanted to be in a race and you wanted to swim better, okay? So you would get a swimming teacher, right? But he would teach you all the different things to help you become a better swimmer. But come the day of that race, he's not going to swim for you. It's up to you to swim and to use the things that he taught you. So that's the same way with trading. We cannot trade for you. It's up to you to decide how and when you want to trade, okay? Last question, you talk about ticks. What exactly are they? Good question. Ticks are just simply a unit of measurement. Okay, so for example, let's say you're trading stocks and the stock closed at 50. Okay, now stocks trade in measurements of a penny or a cent, one tick. So one tick above 50 would be 50.01, okay? $50.01. A tick above that would be $50.02, okay? And so forth. 5 ticks above would be $50.05. So that's 5 ticks. A full point or a full dollar would be now up to 51. That's all a tick is. So if you're trading stocks, they're in terms of a penny or a tick measurement, okay? It's really simple. It's just that that's the standard definition. One way to get more information on that is to go to different websites, go to Google it, ask what a tick is in terms of trading stocks or futures, and they can answer that as well on the internet. Okay, I hope that answers it for you. Okay, listen, we're out of time and we've come to the end of the presentation. I want to thank you so much for attending today. I really hope you learned something, and I really hope we helped you answer the question, should you wait to trade before earnings announcements? Okay, we showed you dozens of examples where it wasn't required, but ultimately it's your choice. So once again, if you want to take your trading to the next level, please, now is the time to do that. As you take one last look at our disclaimer here, I really look forward to all of you becoming students of mine in the Dynamic Duo course using a free year of our PTS Primo charting platform, okay? And thank you so much for attending today, and I wish you all the best of luck. Thank you so much. I'll see you next time. Bye-bye.